A seismic shift is underway in global finance, led by the BRICS nations, Brazil, Russia, India, China, and South Africa. For decades, the US dollar has dominated international trade, granting America outsized economic power. But BRICS is challenging the status quo, pushing for de-dollarization to reclaim economic sovereignty. The dollar's role as a tool of US foreign policy, especially through sanctions, has made other nations wary. For Russia and China, the risk of being cut off from their own money is real, not hypothetical. BRICS argues that a multipolar world needs a multipolar currency system, not one dictated by US interests. When the Federal Reserve shifts policy, emerging markets everywhere feel the shockwaves. BRICS wants a more stable, equitable financial architecture, one that doesn't hinge on a single nation's decisions. Their plan isn't to replace the dollar overnight, but to create alternatives for trade and investment. By trading in their own currencies or a new shared one, BRICS can cut costs and reduce exposure to US monetary policy. This is a calculated economic strategy, not just a political gesture. BRICS countries are major producers and consumers, and their trade volumes are massive. Conducting trade outside the dollar strengthens their economies and insulates them from US policy swings. The idea of a BRICS-led financial system is gaining traction, posing the biggest challenge to the dollar's dominance in 70 years. The world is watching as this new chapter in financial history unfolds. The movement is about balance, ensuring no single country holds all the financial power. It's a direct response to vulnerabilities exposed by the current system. As BRICS builds momentum, the global financial landscape is set for dramatic change. The question is not if, but how quickly this transformation will reshape the world economy. The era of dollar supremacy is being tested as never before. BRICS isn't just talking about change, they're building it, starting with a new digital currency. Unlike decentralized cryptocurrencies, this will be a state-backed digital payment platform, anchored by a basket of BRICS currencies and possibly gold. The aim, a stable, reliable medium for international trade, independent of Western-controlled systems like SWIFT. Using blockchain or similar tech, cross-border transactions can be fast, secure, and low-cost. No need for US or European banks. The digital currency would represent claims on a basket of assets designed for stability. With geopolitical tensions rising, BRICS is fast-tracking development, aiming for a prototype as soon as 2025. Leaders will review progress at upcoming summits determined to see this through. The goal, a functional, expanding system within a few years. If successful, this digital currency could shift a significant share of global trade away from the dollar. For BRICS businesses, it means cheaper, simpler transactions. For the world, it signals the dawn of a multipolar financial era. This isn't just technical innovation, it's a geopolitical move to rebalance economic power. The stakes for the global order are enormous. As faith in the dollar wavers, investors are flocking to hard assets, gold, silver, and now Bitcoin. Gold, the timeless store of value, is being snapped up by central banks like China's and Russia's to diversify away from the dollar. Silver, with its dual role as a monetary and industrial metal, is also in demand, especially as new tech drives industrial use. These metals offer protection against inflation and currency devaluation. Bitcoin, though volatile, is gaining traction as a digital safe haven. Limited in supply, decentralized, and immune to government control. For those in unstable economies or under authoritarian regimes, Bitcoin's resistance to censorship is a major draw. The BRICS de-dollarization push is amplifying demand for all three assets. Investors are seeking safety in things that can't be printed or seized. The message, in a world of currency wars, tangible and decentralized assets are vital for preserving wealth. Gold offers ancient security, silver industrial promise, and Bitcoin digital neutrality. The convergence of these trends is reshaping global investment strategies. The move away from the dollar is more than politics. It's a signal that the old financial order is under strain. In this transition, hard and digital assets are taking center stage. Despite mounting challenges, the US dollar remains the world's financial powerhouse. Its dominance is rooted in decades of trust, deep markets, and global infrastructure. After World War II, the Bretton Woods Agreement crowned the dollar as the reserve currency, a status reinforced by the petrodollar system. US financial markets are vast and liquid, making the dollar the easiest currency for global trade and investment. Most international loans and reserves are still denominated in dollars, The SWIFT system, the backbone of cross-border payments, is dollar-centric. This entrenched network effect makes the dollar hard to dislodge quickly. The US enjoys what's been called an exorbitant privilege, financing deficits cheaply and running up debt with global demand for its currency. But the fortress is under siege. BRICS's coordinated de-dollarization is the most serious challenge in a generation. The weaponization of the dollar through sanctions has forced countries to seek alternatives. Cracks are appearing. The world is inching toward a multipolar currency system. The dollar's share of global trade and reserves is expected to decline. Its reign isn't over, but its unchallenged supremacy is fading. The transition to a new order could be turbulent for the global economy. The dollar will remain important, but it must now share the stage. The era of a single financial kingpin is ending. China, Russia, and India are spearheading the BRICS financial revolution. China is pushing the yuan in global trade, signing currency swap deals and settling more transactions in its own currency. Russia, hit by Western sanctions, has slashed dollar use, boosted gold reserves, and now trades energy in rubles, yuan, and rupees. India is setting up rupee-based trade settlements, even buying oil in rupees to cut costs and reduce dollar exposure. Together, these giants are building new payment systems and trade agreements, forming a powerful economic bloc. Their actions are already shifting global trade flows and reducing Western dominance. The de-dollarization agenda is moving from theory to reality, led by these three nations. BRICS Pay is the alliance's answer to Western payment giants like SWIFT, Visa, and MasterCard. It links domestic payment systems like China's UnionPay, India's RuPay, and Brazil's Pix into a seamless cross-border network. The goal: make international payments easy, cheap, and immune to sanctions, using local currencies or the new digital BRICS currency. Mobile-first technology like QR codes and wallets brings financial inclusion to millions. This system empowers small businesses and individuals to join global trade. BRICS Pay is the backbone of a self-sufficient financial ecosystem. If successful, it could set a new global standard for payments: decentralized, resilient, and inclusive. The vision: a new financial Silk Road for the 21st century. The rise of BRICS currencies is reshaping opportunities and risks for traders and investors. New currency pairs like yuan ruble and rupee yuan are gaining liquidity, creating fresh trading possibilities. Commodity markets are shifting too, as oil and gold start trading in non-dollar currencies. Traders must now track BRICS economic policies and currency moves, not just the dollar. Arbitrage opportunities will emerge as new systems and benchmarks develop. Price differences between markets, like gold in New York versus Shanghai, can be exploited by savvy investors. The transition phase will be volatile, but also profitable for those who adapt. Diversification is now essential. Relying solely on dollar assets is increasingly risky. Investors should consider BRICS markets, hard assets, and digital currencies like Bitcoin. The era of a single financial superpower is ending. Success will go to those who embrace complexity and spot new opportunities. The global financial map is being redrawn. Adaptability is the new currency of success. Experts are sounding the alarm. America's dollar dominance is no longer guaranteed. Massive US debt, persistent inflation, and aggressive sanctions have set the stage for a challenge. The BRICS de-dollarization push is a coordinated effort by major economies, not a fringe movement. If global demand for dollars falls, the US will face higher borrowing costs and a weaker currency. The transition could mean more expensive imports and a lower standard of living for Americans. History shows reserve currencies don't last forever. The British pound once ruled, until the dollar took over. Such transitions are often turbulent, marked by conflict and instability. The rise of BRICS signals a major shift in global economic power. The future will be more fragmented and competitive, with the dollar sharing the stage with the yuan and possibly a BRICS currency. This new system could be more stable, but the transition will be risky and uncertain. Diversification and adaptability are key for individuals, businesses, and governments. The old certainties are dissolving. A new world is emerging. The stakes for global finance and for all of us could not be higher.